Welcome to the Jade Capital Partners End of Week webinar. Before we begin, it should be noted that any advice is of a general nature only, and your personal circumstances have not been taken into consideration. Hi, my name is Rob Clayton, and welcome and thank you for joining me. The Australian dollar still holds to a negative bias as the price action over the last 5 days posted an outside range day. And this is the third outside range day now, and follow on to confirm this signal has been seen, with the weakness now looking towards 75.20 from this morning's breach of 75.80. In light of how this technical pattern holds and the rejection from that 77 region and the break of 75.80 today, does look for the weakness towards 75.20 and lower towards 74 cents as a possible potential target. In light of the current weakness, any advances on the day should find resistance now between 76.10 to 76.60 into next week, also seen as a potential opportunity for the bears to return and supply to increase. With the dollar index breaking over 96.5 overnight, the euro pushed lower. When we look at the 4-hour chart, you can see here it's tumbled and reaches this week's target of 111.20. For what I'm seeing now is further weakness, with the stochastic holding to a negative bias, and also with the ADX clearly kicking in as a strong trend indicator, suggests that we should now see a move towards 110.50.75, with the potential of actually seeing a lower move to the recent forecast I held a few weeks back of 109.50.70 and reassess from there. But one stage at a time. 111.20 is giving way now, so 110.50 is the next target. Any advances towards the upside still looks to resistance around 111.85 as minor, and firmer above at 112.40.45, which is this area where the market clearly rejected about 2 days ago. Dollar yen. The call on dollar yen this week was a view that a break of 101.85, which was currently about from here. You can see the break, the bull candle came right through and continued on for 2 more days. Now, from the break of 101.85, the next objective was roughly around 102.60, and then 103.35.45, and then the next target now currently holds into today and next week of 104.05.30. I am a little bit cautious to the call of holding a long position. Reason behind that is it, as you can see from the previous challenge of 104.30, the market rejected and the trend stopped immediately, and we saw a decline back to 101.20. Now, in light of the current pattern here, is the fact that if we get another rejection of 104.30, could see this move back down towards initially the first target of 103.55, which is not too far away now. That has been the low today, and then lower, as only seen minus support at 102.80, and it is from 102.80 that if we get a break, this would negate the upside and look back towards 101.95 to 102.10 and reassess from there. However, I must heed caution, because the reason why is that if we get a break of 104.30, I believe there is a great many stops above that level, and it could trigger a rally on towards 106 to 107 as a potential target from where this outside range day was posted. So, very tricky way to play dollar yen in the next few days. Whether, so when I say whether is the fact that 102.80 goes, but in terms of how the market holds, the view is bullish while 102.80 holds. That's in short. And if that's the case, eventually it will wear the upside out until we get a break of 104.30 and then the move on. a very interesting price action this morning on sterling as the market plummeted from 126.30, as you can see here, towards a low officially recorded on Bloomberg of 118.41. So you can see here the market did find support there. The recent forecast I held over the last few days was to 124 to 118 as a potential target. Obviously we got there quicker than anticipated, but the stories for this move does seem to be the fact it was an algorithm error, maybe, from what Bloomberg is reporting. You can go to their website and get more of an update on the news on why we got this decline. Nevertheless, we have seen this objective reached, I suppose, at 118. Where now? Well, I can only go by what the downtrend is telling me at the moment. And you can see here from the peak of 134.60, the downtrend comes in around 128.75.95. Quite a way, but although it's rather a long distance from where we trade at the moment at 123.65 to 128, which is 5 big figures away, the way this market's trading is very hard in terms of how it can actually progress in the next few days, whether we haven't seen the low and it continues lower towards the 31-year lows or around the 1985 region. But what I'm noting is the fact that the trend is still strong. So I still expect to see further weakness into London today, and initially looking for a move back towards 122 to 118. Any advances would find resistance most likely towards 126, the figure around this region here. The view in gold has finally come through. After breaking that pivotal point at 1,300, the market collapsed and now finds its base around 112.50 with an overnight low of 1,250 with the overnight low of 1,249. In light of the 1250 support, the market is slightly oversold, and the trend is slightly overheating here, which in terms suggests that we could see a potential rise towards a target of 1268 and reassess from there. It is interesting to see that we have rebounded quite firmly off that support level around 1,250. So my call was the break of 1,300, $50 fall. We've got that. Now we're seeing a recovery. Clearing the resistance of 1268 would negate the downside temporarily and look towards 1276 to 82, which is around the recent highs of yesterday. However, I'm still in the bear camp, and this is just a small correction to the upside, a short-term bull phase, and then from either 62 or from either from 1268 or from 1282, whichever comes in first, which is most likely to see this demand probably peter out towards 66, but I still feel that there is enough momentum there from the 4-hourly to get a kick up towards that 68 level and then look back to re-challenge 50. A break of 1248 exposes the next target objective of 1226 to 28. Oil, very interesting to see that the fact that the market is not pulled away after 7 days of a bull candle. However, now finding the resistance around $51 a barrel. Market is turning here. The trend is getting tired. A break of 50.40, which is right on the nose now. 42 has been the low. Would see a further weakness down towards 49.60, and it is from there that 49.60 will give the next move down towards $48 a barrel. The level at 46.60, sorry, The level at 49.60 is a key level, and to the fact that if we get a break there, then further weakness could actually see a move towards 48 to maybe $46 down to where this trough is holding, roughly around 48.5 to 46. But I do like to stress again, we are in overbought territory beyond $51. I'm not a bull, and I expect to see a correction back down very, very shortly. Interesting to see this pattern in the S&P 500 is closing in, and with the technicals slightly breaking down, does imply that we could see a move towards a potential target of 21.36. We are trading at the moment around 21.50. Initially, support does come in around 21.48, but that's only minor. And a break of 21.36 should see a price action like recently here plummet towards that 2100 region and reassess from there. Any advances towards the upside still expects to cap around 21.70 to 72. The SPY still is currently trading on a weaker note and breaking down, and you can see here around 18 days of bullishness, the market is finally coming to a halt and suggesting that the resistance around that 540, the region around 5490 is showing a potential cap for this market to turn away from here, with the bearish shooting star also seen here, looks for a move to a target of, which I'm looking for, is at 54.20, and then underneath 54.20 exposes the next move, which holds to a target of 53.70, which is where the market broke down before, challenged it, failed. So I'll be looking for that level of re-challenging again. Maybe an opportunity to take some shorts back if you are holding that view. But any setting to strength towards that 90 level still at the moment. That pretty much wraps up the end of week webinar. From the beginning of the week, it looks like the calls are slowly coming through as the US dollar is strengthening. So with a weaker Aussie, a weaker euro, a firmer dollar yen, weaker pound, a weaker gold, a toppy position in the oil, stock market looking a little bit soft, keeps everything in track for what I'm looking for into next week. So keep an eye out for my report that will come out on Monday afternoon. And thank you very much for your attention, and I hope you enjoy the weekend ahead.